Hey guys, it's Vinny. Welcome back to my channel. In today's video, we'll be going over two different strategies that you can use to invest your first $1,000. So the time has come, you've saved up $1,000 and you're ready to take action and start your investing journey. The only problem is you are unsure about where or how to invest your money. You've done tons of research and still aren't sure. Well, I'm going to give you guys two different strategies that you guys can implement to get started. One is a little more simpler and safer than the other. However, one can be applied to the current unpredictable market of 2021, but you can't go wrong with either or. Before we begin, I want to talk about the importance of investing. I know some people don't care for investing or it doesn't interest them, and that's totally okay. But investing is great for so many reasons. The best benefit to investing is you're creating a new source of income for yourself that can be very passive when building your wealth. Many people, such as the amazing Warren Buffett, believe that the stock market and real estate are the best investments anyone can make, and that the stock market has a better ROI in the long run. It's also important to invest to prepare for your future. Savings accounts don't offer the best interest rates, and it will take way too long to see a significant return on your money. Am I saying savings accounts are bad? Absolutely not. They're super important. They just shouldn't be treated as a main investment or have high expectations for your money's growth. With that being said, let's jump into our first strategy. Alright, so you've opened your brokerage account using my link in the description below. You got your 2 free stocks, your money in your account, you're ready to roll. But you don't know which stocks to pick. Pick all of them. Yes, I literally mean all of them. You can do this by investing in VTI, which is Vanguard's total stock market ETF. By investing in VTI, you are investing in the entire US stock market. Yes, you are buying every stock, but their top 10 holdings make up 22.77% of their portfolio, which consists of companies like Apple, Facebook, Johnson & Johnson, and JP Morgan Chase. If you think investing in the entire stock market is a bit too much or spreading yourself too thin, you can invest in S&P 500 ETFs. A few examples of these ETFs are Vanguard's VOO or Spider's SPHD or SPY. All these ETFs track the entire S&P 500, meaning you are investing in the top 500 companies in America, and each ETF has its own benefit. Each ETF's portfolio holdings are the same, but the percentage of each company that they own are different. For the most part, the top 10 holdings in the S&P 500 are companies like Amazon, Google, Microsoft, and Tesla. Investing in the entire stock market or in the S&P 500 are both great ways to get started in your investing journey, as they can be the easiest and safest way to get started. Both of these investments are better for long-term investing, as your return will vary year to year. However, over the past 5 years, the S&P 500 and VTI have had similar returns. From 2015 to 2020, VTI had an average return of about 13.7%, and the S&P 500 had an average return of about 13.4%. Both of these beating the average market return of about 8%. This strategy is one of the best ways to invest your first $1,000. It's simple, it's safe, and it's a great way to get introduced to the market. Alright, so the next strategy I'm going to be going over can be used in both a normal market or in an unpredictable market like we've seen in 2020 and 2021. 2020 was a crazy year in the stock market with the crash, and even in 2021, we are still living in unpredictable times. This strategy will allow you to invest in individual stocks, but we will cover multiple sectors to protect ourselves from unpredictability. We are going to be investing in individual stocks. We are going to create a diverse portfolio, purchasing quality stocks and companies. By quality stocks and businesses, I mean businesses that have great track records over the years for being stable, reliable, and having continuous growth for both the stock and the company itself. To make things easier, I will create a pie chart and take you guys through a step-by-step example. For the sake of keeping things simple and easy to understand, I'll be rounding the stock prices to the nearest dollar. Alright, so the first type of stocks you'll want to buy are stocks with a competitive advantage. Companies who are the best at what they do and are at the top of their game. Two stocks that come to mind are Apple, who is the leader of the phone and computer business, and Coca-Cola, who is the most famous soft drink company in the world. These two stocks will give you peace of mind and security in your portfolio because you are owning two of the best companies in the world. Apple is currently trading at about $121 per share, so we can afford to purchase 2 shares for a total of $242. Apple will make up just under a quarter of our portfolio percentage-wise, which is arguably the best company to have as your biggest holding. We can then go buy a few shares of Coca-Cola, which is currently trading at about $50 per share. So let's say we buy 3 shares for a total of $150. Alright, we're off to a great start for our $1,000 portfolio, owning some high quality companies, but we need to diversify. The next asset we're going to add to our portfolio is gold. Gold is a great asset to add because it is a great hedge for our portfolio. For example, when the stock market crashed in March of 2020, there was essentially no crash to the price of gold. In fact, the price quickly went up and soon after hit all-time highs. An easy way to invest in gold is through an ETF called Spider Gold Trust, which was designed to track the price of gold. GLD is currently trading at about $166 per share, so we will purchase one share, adding gold to our portfolio. As we all know, a lot of stocks crashed in early 2020, but as you can see, gold did not. There was a minor dip followed by continuous growth, and then gold reached an all-time high. Gold is a great hedge to add to our portfolio, and it will make up 16% of our portfolio. The next asset we'll be investing in is oil. This can be very controversial to many, and that's totally okay, but this can be an important investment. See, what we experienced in 2020 was an oversupply of oil in the world because nobody was traveling and everybody was staying home. The only thing was companies were still digging up oil and supplying it. So in the short term, we saw oil prices crash to below $0 per barrel because there was no demand for it. However, the world is slowly beginning to restart. People are starting to travel a little more, restaurants are beginning to open up, and the demand for oil is slowly increasing. Oil can be a bit of a risky investment, but high risk for high reward, and the reward could be a big one if the demand for oil continues to increase through 2021. The Organization of Petroleum Exporting Countries and their members expect the demand for oil to rise to 5.9 million barrels per day year on year, averaging 95.9 million barrels per day. OPEC isn't the only one who is optimistic about oil prices increasing. One of the greatest investors of all time, Warren Buffett, is optimistic about the oil sector as he just made a $4.1 billion investment into the oil giant Chevron. Oil is competing with clean energy, and Chevron is adapting to the new changes. Chevron is investing $100 million into its future energy funds. They've also committed $100 million to the $1 billion plus Oil and Gas Climate Initiative Climate Investment Fund, and have invested over $1 billion in carbon capture. Chevron is the largest oil company in the United States and is currently trading at $100 per share. And even though it may be pricey compared to the other oil stocks, they have shown great potential for the future that even Warren Buffett sees. Because it is higher priced, we will only be adding one share to our $1,000 portfolio, which is starting to come together. The fourth asset that we're going to be investing in is a simple one, which is cash. Having cash in your portfolio is vital because if stocks crash, you have what is needed to buy them at a bargain. If you have no cash on you, you have no chance of buying stocks when they are cheap. And when I mean cash, I'm not talking about cash just laying around not earning you anything. I'm talking about cash earning interest in a bank. Even if it is a small amount, we want some percentage of our portfolio to be cash, which is why we will be adding $100 to our portfolio, making up 10%. The next asset we'll be investing in is one of the best ways to invest your money in stocks, especially in unpredictable times. This asset is investing in Dividend Aristocrat or Dividend King stocks. A Dividend Aristocrat is a company who has continuously increased their dividend payment annually for 25 plus years. And a Dividend King is a company who has continuously increased their dividend payments annually for 50 plus years. Investing in these kinds of companies are almost like cheat codes because no matter how the stock performs, you are always getting paid an increasing amount of money from them. This is also one of the best investments because in the long run, they can outperform the market and do better than most stocks during market crashes. These companies are reliable, stable companies and have survived many market crashes while continuing to increase their dividend. To round up our $1,000 portfolio, we will be investing in one Dividend Aristocrat and one Dividend King. Our Dividend Aristocrat we'll be investing in is AT&T. AT&T is known for being one of the best dividend stocks and has increased their dividend for 35 consecutive years. People aren't going to stop using or paying for their phones even during a recession, and this gives you great exposure to the communication service sector. AT&T is currently trading at about $28 per share, so we'll purchase 3 shares for our portfolio for a total of $84. Our Dividend King that we'll be investing in is Johnson & Johnson. Johnson & Johnson is one of my favorite stocks that I own, and I know so many people who also agree that this is one stock that they will hold forever. Johnson & Johnson is one of the all-time leaders of Dividend Kings as they have increased their dividend for 57 consecutive years. This company has faced a lot in the market over the past 57 years and still continues to increase their dividend every year. And this stock is the perfect entry into the healthcare sector. People will always need healthcare, especially during this coronavirus pandemic. Johnson & Johnson is one of the biggest players as they are looking to release their vaccine. Johnson & Johnson is currently trading at about $158 per share, so we will be purchasing one share to complete our $1,000 portfolio. Keep in mind that this $1,000 portfolio is just the start of your investing journey. Although this portfolio is nicely diversified, as more money comes in, continue to build on this. Buy more when stocks crash and add more quality businesses to diversify your portfolio even more. Lastly, give your investments time and allow compound interest to do the wealth growing for you. Both of these strategies are effective and great ways to get introduced to the stock market and begin your investing journey. If you need a brokerage to start your investing journey, you can sign up with WeBull using my link in the description below. When you sign up using my link, you will receive 2 free stocks valued up to $1,400. 1 free stock for signing up, and the second one when you deposit $100 or more into your account within 30 days. As always, do your own due diligence. Don't just listen to some random guy on the internet. You should always do your own research before investing. Alright guys, that's it for today's video. I hope you guys got some value out of this video and implement at least one of these strategies. If you found this video helpful, please hit that like and subscribe button to see more content like this. I make content about investing, personal finances, and entrepreneurship, and teaching you guys how to make, save, and multiply your money. If you guys have any questions, please feel free to ask in the comments below. Thank you guys for your time, and I'll see you all next time.